All right, this is the last video in our series on checklist items before we invest in a stock. This video covers catalysts. And what's a catalyst? A catalyst is just something that triggers a reaction. And in investing, a catalyst is just something that would trigger a revaluation or a movement in a stock, right? So I'm going to just give a few different examples. Catalysts, it's easier to explain it in terms of specific stocks and specific situations that have happened, but maybe there's some generalities we can extract through the examples I'll go through in this video. So here's one example: is sometimes management actually does the work for you, and management themselves will articulate a series of catalysts that they intend to execute in order to improve the valuation of a company. And great example of this was Brinker International after the credit crisis in 2009-ish, 2010. Brinker, the management actually went through what level of profitability they were targeting and a level of buybacks they intended to do, and they actually gave out a specific earnings per share target that they intended to hit in a couple of years' time. So that's easy. You can just look at the EPS number, look at the current stock price, kind of look at what a normal multiple would be, and you could make a case that this is probably a double, potentially. It really got down to how credible management was and whether they were able to meet these milestones as they articulated them. But in this case, management gave you the catalysts. So sometimes just you're tuning into your conference calls with the company every quarter or reading the transcripts gives you a set of catalysts to look for. All right, so that's one way to think about it. Another way to think about it is sometimes you have an industry or a sector that is in a down cycle or some period of significant pessimism, and the catalyst will be kind of that pessimism moving further and further in the rearview mirror. And this one, you're not going to necessarily have a very hard time horizon, but you kind of want to see something manifest over a period of a few years. And a good example here would be something like the Puerto Rican fiscal crisis, the government fiscal crisis that happened in Puerto Rico. I've talked about the bank that I had bought there called First Bank of Puerto Rico that was trading at 1/3 of book value during the depths of the government crisis there, the fiscal crisis. And there were some specific catalysts to look for. For example, management actually gave out their excess they had their tier 1 capital number, so they had significant excess capital, and you kind of had to trust the company's book value, that they were marking their loan book properly. But with the company trading at 1/3 of book, the management gave out some catalysts about getting permission from banking regulators to resume buybacks and resume dividends. And you could kind of map out that something like that, the permission should happen within a couple of years. And then also the Puerto Rican fiscal crisis should get worked out over some number of years as well. But these time horizons are a little bit loose. But what you would do is write down, kind of these specific catalysts: resumption of buybacks, resumption of dividend, and then continued progress on the Puerto Rican fiscal situation and their workout from bankruptcy. And if you see a catalyst that sort of is contra that thing, that sort of was going in the wrong direction, well, that indicates the thesis is probably wrong. It turned out, though, each year they made greater and greater progress. They resumed buybacks, they resumed dividends, and now the stock is trading at book value. So it was actually a triple off the bottom. So now I've realized these catalysts, and then now it's probably time to start trimming back the stock, which I've done. So here's an example of you realize the catalysts, they happen, and now the thesis has been achieved. It's time to start to liquidate things. Other cyclical industries, you can look at just the profitability. If you see a company earning below average profitability, and you can argue some process either of reduction in capacity, elimination of competitors, or an improvement in the economic backdrop to help the industry resume profitability, or help the company resume profitability levels that it had before, you can kind of look for these things and articulate specific catalysts that you would look for that would either prove or disprove an improvement in the thesis. Okay, so these are just general examples to extract from types of cyclicality that we see in the stock market. And then the final point I want to make, which I'll probably do a separate video on this too, but it's on documenting your theme and your catalysts. It's very, very important that we kind of make sure our brains don't trick us into misremembering or misnarrating the theme and the thesis and the catalyst we were looking for a given stock. So with the Puerto Rican situation, for example, I documented these things, but now I find myself actually kind of thinking, maybe there's more for this Puerto Rican theme. Maybe there'll be a renaissance in tourism as COVID, moves back into the rearview mirror. Maybe as Puerto Rico works its way out of its fiscal crisis and takes care of its bankruptcy, the island itself is going to have better times going forward. Well, that was not my original thesis. And so you kind of want to make sure that you're clear to yourself about what the theme was originally, what the thesis was originally, what the specific catalysts were, and you document them so that you don't have thesis creep. Now, it's okay to have a thesis change, but you want to make sure that you're remembering specifically what you documented, and then you want to know that you're adjusting the thesis going forward. You don't want your brain to kind of just misremember and misarticulate what the catalysts are. And because I documented my theme on First Bank of Puerto Rico, most likely what I'm going to do is sell the majority, if not the vast majority of the shares, and just have a little stub end that I keep for this later thesis that's a little squishier, which is the Renaissance of Puerto Rico over the next several years. And this will kind of keep me honest to my original theme and my original thinking, okay? So we'll do another video on documentation and why it's important, but you want to make sure you have specific catalysts, as specific a time horizon as you can, and you want to look for evidence to support or debunk the achievement of the catalysts you're looking for, okay? And then that will hopefully help the stock go to the valuation you believe it merits from the undervaluation that it currently has, all right? So as always, I hope these videos are helpful, and thanks as always for watching.